Yo, Froggystyles here. We're about to open this up on the Thomas James video with haircuts, the margin calls, and we got some SPY put information that went in the money for Friday. So we're about to explain what's going to happen next week, and it doesn't look too good. So
what's up, everybody?
First things first, we got SPY puts that went into money, as you could tell on Friday. Actually, let me pull this chart up here so we can actually see it. So I can explain what the heck happened. So as you can see here, we got SPY, and it started off way up here from the day before at like 128, and it just got smashed down 15 points. What happened there is it brought a whole bunch of puts in the money. So like what happened the previous week before, they did the same exact thing happen on Monday, Tuesday. You end up having that sell-off for Monday, Tuesday. We see Friday, Thursday, Wednesday, Tuesday, Monday. So you got a sell-off going in here, and that you're going to see rinse and repeat of the same exact thing, except for it's already prepped going into another sell-off. So what I'm thinking is going to happen is there's a chance that you're going to see this 404 range quite quickly, and if it holds, we're safe. If it doesn't hold, there's a number way down here we don't want to see, which I'm not counting that number. I'm just saying there is something to be watching for. Let's hope that 404 holds. If it doesn't, we're probably going under 400. So now let's pull up the Thomas James video here, where he is talking about collateralized haircuts and possible margin call Monday. So it's a combination of two things driving the market down, and it's kind of worrisome if you're invested in a positive position. So let's see what he's got to say.
Welcome back to the channel, everyone. Today I want to talk about how there will be massive margin calls coming on Monday as a result of new margin haircuts being implemented and becoming effective Monday morning. So stay tuned and let's make some money. Now you may say, Tom, is this just a clickbait margin calls incoming video, or are there some actual large margin haircuts being implemented just around the corner? Is this just some small 2, 3 or 5% margin haircuts, or larger 25, 50 or 100% margin haircuts for large securities? So
now these haircuts are going to be massive, and in the link to the description down below, I actually posted the link to this video, and I posted a link to the DTCC article that he has on the screen, so you can check out both things, what's being talked about here.
I want to go through this new notice from the DTCC, which was published on April 29th and is being implemented as early as the 2nd of May.
Tomorrow.
AKA on Friday afternoon, the DTCC told their market participants that they would be implementing new haircuts coming on Monday morning. Busy Brands tweeted asking James if he could quickly summarize it or explain it to him like he's Joe Biden. James,
oh boy, explain it for Joe Biden. That means it's going to have to be simplified.
Replied, tweeting, saying Marge is calling. And even GameStop is putting on their Marge voice, because even GameStop knows that margin calls are coming. So I want to go through this listing and only really point out the key margin haircuts that are being implemented Monday morning that will have the largest impacts. And I think first up on the list is any mortgage-backed security issued by a US agency or US government-sponsored enterprise that's issued below a AA rating will suffer a 100% haircut. So basically any government-sponsored mortgage-backed security below a AA rating will be
mortgage-backed security.
We've been talking about that for a couple of weeks as well.
Yeah, so pain's coming. You can definitely see that.
Completely worthless as of Monday morning. We're also seeing any interest-bearing agency unsecured notes, also with a AA rating or below, will also suffer a 100% haircut. On top of this,
that's a lot of haircut. That's not a little bit. That's a lot of it. So pain's coming.
We've even got any corporate.
Huh?
I was going to say the DTC is going to be like haircuts.
Pretty much.
Bonds with a AAA rating suffering a 20% margin haircut. Obviously, as that rating decreases, the size of the margin haircut increases up to 100%. On top of this, we've also got any asset-backed securities, even the ones supported by a US government conservatorship that's rated AAA, will receive a 35% haircut. Again, if it's AA, it suffers a 45% haircut, and if it's A rated or below, then it receives a 100% haircut. Now, I think the one that will do real damage is any equity securities, whether it's listed on a US national securities exchange like the New York Stock Exchange or the NASDAQ that has a market price of over $10, instantly receives a 25% haircut. And if the
Ouch. I mean, that's still bad no matter which way you look at it.
stock is priced below $10, it suffers a haircut that's even worse. If the stock is priced below $5 per share, it receives a 100% haircut. If it's between $5 and $7.50, it's a 50% haircut, and obviously anything above that $10 mark instantly suffers a 25% haircut. That basically means that every single hedge fund has just had the value of their fund slashed by 25% for margin requirements. Even those funds holding stocks like Amazon, Apple, Facebook, Google, and many others have just received a 25% haircut on their entire fund value for margin requirement purposes.
Now, I'm not sure if that counts for the entire fund value. I thought it was just mortgage-backed securities. Maybe I'm wrong, but I think it was only pertaining to one group of collateral. So I don't know. I'm not exactly sure if I'm 100% right on that, but I would highly doubt that your entire portfolio is being haircut just because of a mortgage-backed security. I'm waiting to see how that's going to turn out, because that's even worse if that is the case.
Yeah.
And you've also got any equity securities warrants also suffering an immediate 50% haircut with anything priced above $5 per share, and a 100% haircut for anything priced below $5 per share. Now, obviously, that was a load of information thrown directly at you. To summarize it, it basically means that all stocks have received at least a 25% haircut, and many mortgage-backed securities and asset-backed securities are also suffering 25% and above haircuts as well. That basically means that every single hedge fund out there has had their entire fund value instantly cut by 25% as of Monday morning. That obviously means that many hedge funds will struggle to meet those margin requirements and will end up being margin called unless they can pluck up the additional cash.
See, that's exactly what we're looking at right now is the margin calls that could be coming. You're going to see stocks drop on top of it. SPY's already looking to take a dip. And when you see all that start happening, it's like a domino that's going to knock over the next domino. How much pain is coming? That's the question.
I take a lot.
Monday, Tuesday. Yeah.
I don't think so.
Kind of nervous on how Monday, Tuesday is going to look like, because, I mean, they have to have it started on the 2nd, finished by the 3rd. I'm not sure at what time on the 3rd, but that tells you right there. I'm always looking for a bear trap or a bull trap for Monday, Tuesday. We're getting a confirmed bear trap Monday, Tuesday. After that's over, what does that mean? They put all that money back in and everything goes back to normal? I don't know. But it sounds like a stress test of some sort, but just in a negative direction.
A lot of haircuts.
Hedge funds sell off some
Yeah, pretty much.
of their assets to get the 100% face value or 100% cash value back from the sale of their shares. For example, if there's a hedge fund out there holding $1 billion worth of Apple stock, that will only be classed as $750 million worth of stock for those margin requirements. To meet the full $1 billion margin requirement, they would have to sell off their entire Apple holding. Now, obviously, that's causing lots of...
Wait, what did he say there?
$1 billion margin requirement, they would have to sell off their entire Apple holding. Now,
why would they sell the whole Apple holding for 25%?
Yeah, I don't understand.
Well, hopefully that's not the case, because, I mean, it's already going to be bloody enough as it is. And if they have to sell off a massive position, I mean, it's already going to be looking red as it is. So for anybody that has UVXY or SBX or UVX that I mentioned in one of my previous videos, I mean, you're looking to make out like a bandit for Monday, Tuesday that way. If you have puts, depending on what asset you're in, I think you're going to end up making money on Monday, Tuesday, but I don't think it's going to last too much past that. So I would probably, like right now, I got a big position in UVXY. I'll probably be bailing out by like noon on Tuesday and taking all my gains. And then we'll probably buy some calls, waiting for all the assets to go back up in price. So to me, if they want to manipulate the market by putting this stuff in there, I'll just ride the dip, sell the UVXY and buy calls and just ride the rip. So there's going to be corrections. I don't know even know what else to do. I just hope the pain isn't too bad. So
it doesn't look really good though.
It's going to be ugly.
Yeah, with what happened Friday and then this, I don't know, man. I'm interested to see what's going to happen, to be honest. But
I should have screenshotted that max pain for Friday because like after the market closed, they end up clearing off max pain, so you couldn't see the previous week. And I wanted to pull it back up to see all the options that came into money. It's like $5 worth of like options that came into money just back to back to back, and they're gonna have to cover all that. So it's gonna be some pain.
Obviously, that's causing lots of panic in the market, and considering that Nasdaq has just broken below those January, February, and March lows, we're seeing a massive influx of searching for the term margin call. Now,
yeah, so that's pretty much it with that. I mean, the pain is coming, and I don't know how bad it's going to be, but I mean, obviously, you got a twofer. You got the SPY coming in there; it's going to be dropping lower Monday, Tuesday. And then you turn around and you got haircuts. So, and it's going to be forced. So, and then right here, difference says Fed is on Wednesday also. So you got even more possible pain. What is that, a 0.5% interest rate hike? But I think that's already been factored in. So that's going to hurt.
Yeah, we're not, it's not about Thomas or not. It's about the information of the DTCC that they released Friday night. That's really what it was about.
Yeah, what he's saying is on point. I mean, I understand, like, he does put out pretty good stuff. You have to kind of filter through to see. But I do like that video that he put out because it's exactly on point. That's pretty much it.
We're just not really making a joke. It's really not funny what could come of this, but we'll see.
Yeah, you might consider Thomas James as clickbait, but the information's on point. I watched Charlie's vids just before that to confirm it. Thomas James' version seemed to be a little bit more like simplified and easier for everyone to understand. Charlie's vids was a little bit more complex, so I didn't use it, but it was exactly the same exact thing. So, but that's pretty much it. I just figured I'd give you guys a heads up. Haircuts are coming for Monday. Obviously, that's going to bring some pain in. You also got the SPY dipping. That's going to bring more pain in. And then Fed rate hikes, I think they were already projected, so they're probably factored in already. So, like I said, I think there's going to be a pretty bad, bloody Monday, Tuesday, and hopefully it holds the market above 404. If it falls, pain could be even more severe. But I don't expect it to stay down. Once they go and cover them haircuts, I expect once they go and proof or hold collateral, I expect them to put everything right back on the market the way it was before. So, like I said, expect a dip and then a bounce back up. So,
Broke Digit says was the sell-off on Friday triggered by DTCC release or leaked? I would have to say the release wasn't until later after hours. So, you know, do your own thoughts on that one. I can't really say, but I think there's a lot going on, right? Like, look at mortgage-backed securities. They're already hammered. They're going to get hammered even more.
Yep. Yeah. I'm not sure if the haircuts will cause the MOAS, but I see margin calls coming in. Like, it's going to be forced collateral issues. And we'll see who's able to make it through this, because Monday, Tuesday is going to be paying for the hedges. So, like I said, don't be surprised if you see some rough stuff going on. I'm going to be watching the DXY, which is US dollar. And if it skyrockets at that point in time, then we know what the market's going to open up as. So just keep an eye out on that dollar, the DXY. And if, like I said, if it starts ripping, you already know what direction it's going to go. If the dollar goes up, the market goes down. So just keep an eye out for it. Just giving you guys a heads up so you're not like kind of blindsided by anything weird that happens. So Thank you guys for coming. Please hit that like button. Will Smith it a couple times, and I will see you in the next
Get your
video.
haircuts. Don't forget your
Thank you,
haircut. Good night.
Yep. Good night, guys.